Alrighty, what is up everybody? Welcome back to another technical analysis video. Now, this video we're going to be looking at graph, but first I'm going to remove all these drawings because yes, we've been watching this very closely. Yes, there was many drawings up there, but I want you guys to be able to get inside my head so you can do this technical analysis too, right? That is the whole goal. So we're looking at the 30-minute chart, and real quick for those of you that are brand new, what does a 30-minute chart mean? Well, any of these time frames that you can go to represent one candle worth of price action. Now, price action is the bulls pushing it up, the bears dragging it down, and in 30 minutes of time you have one of these complete candles that form. Now, you can look at it as if the candle prints green at the end, the bulls have won, and if it prints red, well, the bears have won that time frame. So we are looking at the 30-minute time frame, and the first thing we want to do is we see that we are still in a bullish uptrend. We have higher lows being printed, which is great. It means we're going up. Now, if we take a look at the index here, we did have this confirmation right here of this move up, meaning yes, this is a valid move up. The index does say so, along with many of your other indicators as well. So right off the bat, we come into this consolidation following a bullish movement to the north. Okay, so that's really good. That confirms our bullish movement. So right off the bat, do I think this is going to fall anytime soon? No. Technicals say we're actually in a fairly good position. Now, some people, it can fall a little bit and they will freak out and panic sell, but let me set a couple of lines for you. It does look like we have quite a bit of support. Look here. I would say right at the 194 level, so about a 10-cent swing. We do have pretty good support at 194. Now, what would make this chart look bearish to me? What would make me get stopped out and say, hey, maybe I need to wait before I find another entry? And then inversely after that, we will look at the price target because I believe it's going up. So we'll look at a price target for the next 48 to 72 hours. Well, to remain bullish, I would say we need to make sure we do not make a lower low, because we've been making these higher lows all the way up, and as long as we don't break below 167, which for some people can seem like a long way down, but for the long investors like many of us, we know pullbacks happen, consolidation happens, and it's actually healthy to get these pullbacks so we can have higher momentum to the upside. We're an old tree shaking off old leaves, waiting for the new growth to come in. The more leaves we go into the next season with, the more lush that tree is going to be. So we're shaking off all the weak hands here. We're consolidating. The people that were buying it to go long, and I mean maybe a year plus hold in here, they're still holding. Weak hands are being shaken out, and this is all good for us, the people that are bullish that want to see it go up. Now, mind you, anything I say or anything you see in these videos should not be taken as an entry or exit position. I am not a professional trader, nor am I a financial advisor. I'm just simply a guy that loves charts, and I have a fairly good target hit percentage. If you guys watch the live shows, which we try to do Monday through Friday, some of you, against my advisal, trade right alongside me, and that is entirely your risk. But if this was to go to the upside, where are we going? Well, we're going to use the Fibonacci extension, which uses 3 points. We need point A, which is the start of the impulse, or the move up. We need point B, or number 2, where the impulse ended. And C, or point 3, we need where the retracement retraced to. So looking at this, the start of this big impulse up would have been right about here. Okay, now point B would be the end of the impulse. That's simple to do. And point C would be where the impulse retraced to, which would be that line right there. Now I'm going to unlock this right here and buffer it up. Now, what would be my target, right? I like to set 48 to 72 hour targets because I like to day trade and swing trade. There are a few things that I'm holding long. Now, Graph happens to be one that I am holding long since 44 cents, along with Cosmos, Atom, and Algorand. But if I was swing trading this, what would I look for? Well, it looks like to me 317 would be a decent target. I would say anywhere between 61% retracement and 78% retracement to the upside would be a good target for a swing. So if you are in right now, I would be looking for an exit around 285 or 317. Now that is just for your swing traders. Granted, I know there's a lot of people out there that are holding this long, and for you guys, I have had a $4 to $5 price target since the beginning of January. Right, so beginning of January, I set a 6-month price target for GRT right around 350. Now, middle of January, I came back and actually reevaluated that up to about $4. So I do believe we still have room to go, and we still have about 3.5 months until we're halfway through the year. So 6 months into the year, I do believe $350, $4 for GRT is still very, very possible, and that is a very liberal, or it could go a lot higher than that, as it does have amazing potential and could find application on top of the launch that Cosmos is doing this month as well. So I don't want to go too much into the fundamentals, as that makes people get emotional. I like to simply look at the technicals, and the technicals say that the graph is bullish and does have upward momentum, and it also has room to move. So all three of those things say you have a technically bullish chart. Anyways, guys, hit the subscribe button, hit the thumbs up, and I hope to see you on the next video. If there's a chart that you would like to see me analyze, I have no problem taking the time to make a video just for one comment. So leave that comment below, and I hope to see you on the live show as well.